Good day, ladies and gentlemen. It's Eric Coffin. It is Wednesday, November 29th, 2023. I'm here with Charles Funk. He's the CEO of Heliostar Metals, a company that I follow in the Hard Rock Analyst and that I thought I own a bunch of. Trades HSTR on the venture. On Monday, Heliostar released a very impressive resource update for the Ana Paula project. No one was expecting to be disappointed. I mean, with the drill holes Heliostar started putting out, it was obvious. It was obvious the thing was going to get bigger. But I think what was most impressive to me was that you're measured and indicated the upgrade and grade between and to be clear, um, the former resource estimate that was done by Alia was an open pit, and you guys just took a subset of that data and kind of squished together an underground one. It wasn't like you know, it wasn't you were just trying to get a feel for it. You knew you were going to be doing an updated one, but the grades come up. Um, I know people might have been surprised to see some of the ounces move from measured and indicated to inferred, but that's actually a function of the different way that open pits and underground are mined. I mean, do you want to sort of address that? Because I think a few people have asked about it.
Yeah, I think there are a few key features of the resource update, and you're right. It's an oranges to apples comparison that we've made by going from the open pit to the underground resource. So, we've grown. If you take the 2.5 gram cutoff, which is material to us, some mines operate at this level, but that's our cutoff grade. Um, we've added about 300,000 ounces. We've got the 710,000 ounces in measured and indicated at 6.6 grams, and another 450,000 ounces in inferred at about 4.7 grams. And so that's added. If you compare the 2.5 gram cutoff in the previous resource to the same resource, which is the most reasonable comparison that you could make, the measured indicated grade's gone up by measured grade by 58%, indicated grade by 30%. So even when you do break it down to an apples and apples comparison, the grades materially grow. But as you touch on, the criteria for underground mining is a lot stricter in terms of you have to justify the development cost to get to that block of ore, whereas in an open pit, you're going to mine it anyway because you've got to keep going down. And so it has a higher sort of burden of profitability to make it into a resource. And therefore, you need high confidence that it's real. Whereas in the open pit, it's going to be moved one way or another. And at the last minute, you can go mill or waste dump. So that means that you need more detailed drilling to support the same level of classification that you would for an open pit. And so we focused entirely on the core in the high grade panel. That's where our detailed drilling went. And so that supported the measured and indicated category. Anything that was in the previous sort of open pit resource, deeper or more lateral that we haven't yet infilled, then had to move into inferred. But I think the flip side of that is with the grade increase we got by converting in the infill drilling, we expect that we can have similar success by infill drilling some of this inferred material. So I think it speaks to the fact that we'll convert it in confidence. We could also potentially lift the grade with that infill drilling if we see the same bump that we got with this year's drill program.
Well, and it wasn't, I mean, you had a lot of great drill holes, but there were great drill holes before. I mean, part of this was, I guess, doing the infill drilling. You were basically getting rid of some zero grade blocks and stuff like that because your search radius wasn't big enough before. And I mean, people that looked at the first pass of the high grade panel blocks that you guys put out when you first picked it up. I mean, there were holes here and there, and you filled a bunch of those in. That's what's done a lot of the was. I will say that in my experience, and I've been doing this for a while, uh, it's not that normal to see the grade do this when you do this kind of infill drilling. I mean, quite frankly, you usually sort of get kicked in the nuts when you do infill drilling. Almost always, it seems like the grade comes off a bit. It's actually really impressive how much you guys went in the right direction. That's just not normally what happens.
Yeah, and as much as I'd love to take credit for that, it's a function of the ore body. It's a remarkably consistent ore body that wasn't drilled at a tight enough spacing. So the previous modelers with the open pit view did the right thing. They were conservative. They didn't want to blow these high grades out over big volumes and have a problem with their open pit model. So they did the right thing with their lens. We came in and just had a different vision for the asset and recognized that the tighter drill spacing would support a very continuous high-grade panel. So as much as I'd love to pretend we did something magical or special than other management teams, it comes down to the quality of the Annapurna deposit that allowed those results.
Well, I mean, one thing you guys have done that's semi-magical, I think, is you're highlighting uh, parallel zones slash structures that I don't think were evident before. I mean, there was, this intercept and that intercept that were just kind of hanging out there, but you seem to have, I mean, I believe you're in the process of drilling it right now, but the drilling you've been doing, you've been able to sort of isolate at least one other panel, and you think you might have more. So where do you go with that going forward?
Yeah, I think that's been one of the big, I think we knew we were getting a very good project with the approach that we took. I think we recognized in the last few months that actually I think we've got quite a special project. And part of that's come because of how it can grow. Um, like I believe we'll be 1.5 to 2 million ounces of these kind of grades next year because the high grade panel is still open to add ounces. And our geological understanding's grown a lot. And so, we've got the advantage that we're piggybacking on all the work that came before us. No one's really spent a lot of time in the last 5 years really thinking about Annapurna as a project. It sort of got put on the shelf after the Argonaut acquisition of it. And so the early explorers had a very obvious and honestly, it's probably what we would have done when we first turned up at the project. The geology dips to the west, and the gold comes up those plains, or at least that's the classic model in the Granito Gold Belt. Our view, so they drilled holes from west to east, which was the best way to target that type of gold. When you get enough drill density, it actually became fairly clear to us that what controls the gold, or particularly the high grade gold, is east-west structures. And so that orientation either means you hit home runs or you miss. Uh, the obvious thing to do is turn the rigs around 90 degrees and drill across these structures. And so that's where a lot of the volume addition of the high grade panels come from. It's how we recognize that we started continually hitting this parallel panel. I think there's another 100 to 300,000 ounces to come into resources in the parallel panel. And now we've got to the north more of these little isolated blocks where the drill spacing isn't tight enough. And we think that could be really good targets for more of these parallel zones to the north. We know they've got grade. They're just not drilled on the right orientation or very widely spaced drill holes. So, yeah, quite optimistic about what we can add as we step north with this improved geological model for Annapurna.
Well, and the main zone, if you will, yeah, you still think there's a fair amount of room down dip and down plunge. And I mean, I know you get to the bottom of the current resource, there's not much below it in terms of intercepts, but there are some. I mean, there's enough there that you're pretty confident this thing doesn't end basically where the lower set of drill holes is.
Yeah, there's two levels to that discussion. So if you're talking the shallow part in the high grade panel, again, think about those west to east drill holes. They're not the best for exactly containing to the nearest 50, 100 meters where a contact is. And so we know that, we've still got it open. If you look at our press releases, you see those cross sections show that there's still gaps of high grade underneath. And we can
Yeah.
add 20, 50 meters of this material with that detailed infill drill program. And at this grade, that's a lot of ounces. As we go to the sort of down plunge in the high grade panel, it looks like it's breaking up into multiple fingers. And so it's only constrained by vertical holes, and they could easily drill in between these gaps. So we're not going to get the 60 meters at 10 grams, but we might still get the 10, 15 meters at 10 grams as we pursue there. So we see, a couple of 100,000 ounce incremental growth on the high grade panel. But then down deeper, there's the expansion zone, which is wide open. So it's down at about sort of 500 to 650 meters below the surface. It's why Alio was pushing in the decline. They plan to drill that off. For the geologists who listen to your call, it's getting to the higher temperature, hotter part of the system. So you're closer to the big hot intrusion that's bringing the gold that's pumping up into the system. And so most of the deposits to the south of us, Torex is 10 million ounces, Equinox is 15 million ounce deposits, are really close on this contact. Whereas all the stuff that we've been doing is all the way up here. So we know that there should be more gold. It'll probably get a little more copper with that gold as we go deeper. For example, Oryx's Media Luna is 5 million ounces all down here, and we haven't got a drill hole into that zone. So, big picture, I'm very bullish about the chance of this becoming a big deposit. But I know in the short term, I can deliver 1.5 to 2 million ounces in the top 300 meters. So, do that, get the decline in, use that as a platform to say, well, could Ana Paula be 5 to 10 million ounces?
So, I mean, the game plan right now is, I guess you'd like to get that decline down. I mean, there's a couple hundred meters in, but there's a hell of a lot more than that has to go in. And I guess you would be coming in at the 550, 600, 650 level. That's sort of where you'd bring it in, sort of below the bottom of the current
Yeah,
resource.
correct. So that's a lot shallower. So that'll only be about 250, 300 meters below the surface. That will push that. So I think there's two pathways to bring it back into the bigger picture for us. Uh, the first pathway is the standard de-risk and growth pathway. So economic studies. In fact, we're debating right now, do we do a PA on this resource to sort of a rescoping study, or do we do a resource update and then that PEA? That's a decision we've got to make in the next sort of 6 or 8 weeks. Uh, my instincts are probably do a PEA on what we have now and show those economics, then grow that resource and deliver the feasibility study by mid 2025. That's a hard boundary for us to make our construction decision.
Okay.
Separately, as you touched on, we've got this decline. Like Ana Paula's unusual ore body in the previous PFS has shown that it was more money to do the open pit than the underground. And again, that's very uncommon for gold ore bodies. It's a function of the topography and the money that's been sunk into the project. It's only $6 million for us to push the decline in to the bottom of the high grade panel, whereas there was a 22.5 million capitalized pre-strip in the open pit scenario.
Okay.
And so if we can push that in, take a bulk sample, we'd significantly technically de-risk the project. We could
Yeah.
possibly do it without equity. It would be a bit of
Right.
a game changer if we can pull that off. So we're putting a lot of attention into these two parallel pathways, the standard pathway of de-risk and growth, and this parallel, get the decline in, take a bulk sample and de-risk the project without equity. So watch this space as we try and work through those two as management team.
And I guess part of what, aside from the drilling to keep growing this thing, hopefully the decline going in. uh, I mean, obviously you guys have run internal numbers. You would have done that to decide whether you were buying it in the first place, obviously. But uh, do you think there's room for a change in scale when it comes to the mining scenario? I mean, are you pretty comfortable that, a mill of X size will be fine, and if it needs to be bigger, we can worry about it later? Or are you still at the stage where it's like, shit, do we do 1,200 tons or do 2,000 tons? I mean, do you think you've kind of settled on an area where you don't really need to obsess about that, or is it still up in the air?
You've hit upon the mining engineer's fundamental decision at the start of every study is what
Yeah,
scale do you scope it at? With the previous resource, we've looked very closely, done a lot of work on two scenarios: a 1,500 ton per day scenario, a
yeah,
3.5 gram cutoff, so a really high grade but slightly smaller mine,
yeah.
or the 2,000 ton per day scenario at a 2.5 gram cutoff.
Okay.
Um, I think as we show this resource growth, the bigger size probably starting to make more sense. We
Yeah.
were waiting for this resource update to then go and update all the studies with all our new drilling. So we know we'll be in that 1,500 to 2,500 range, which is medium size for an underground. It's not super big, but it's definitely a significant scale underground mine. We can do that because of the width of the ore body. It's very easy to get a lot of volume out of it. And if we see this growth, it probably makes sense to scale it in that range. No, now we've got this resource model, we'll refine that again and probably break that down to the nearest 250 ton per day step. So whether it's going to be 15, 17, 50, 2,000, etc., that'll be what we'll be working on internally in the next month. And that's what we'll demonstrate when we do a PEA or PFS update next year.
And let's say for the sake of argument, you pull the non-equity rabbit out of the hat. I should point out that right now, as we're doing this interview, there is an early born exercise program going on. So anyone that's watching this and goes and looks at the stock and sees it flatlining at 30, It's not because everybody hated the resource updates, because 30 is a strike price for the warrants. So you're just going to see a lot of churning for the next probably 10 days until this program's done. Sounds like that's going to bring in 4 or 5 million, hopefully a little bit more. I mean, let's just use five to use a round number. So you get 5 million. Um, does that mean you can kind of keep going relatively hard or step it up on the exploration side, or do you husband that until you figure out whether you can do something non-equity? I mean, where's the decision tree there once that money shows up?
Yeah, good question. So to explain the warrant incentive to get there, we were looking for, obviously it's been a tough equity market this year,
Yeah,
and you know me, Eric, and you know what we've done
yeah,
this year. I'm not a very patient person. I like to push things ahead when it makes sense to do that. And so we'd raised a significant amount of capital, nearly $30 million this year to acquire the project, to advance it. And we knew one of the obvious questions after the resource would be, when are you raising? And that
yeah,
becomes a significant overhang on your stock. So we were looking at, well, what is the most beneficial way for us as shareholders to maximize our share structure, and to not have to dump a whole new set of shares and probably full warrants. The market's changing as we speak, but a month ago it would have been share and full warrant kind of financing. And it's an interesting problem because if you do that, then you sort of compound this problem. We already had to issue warrants because we took a huge swing to acquire the project. You have to give up something for that.
yeah,
So we issued these warrants at 30 cents to do that. They were half warrants at the time. Or if you can look inside your share structure and come up with a solution, you actually set your own platform to outperform. So it's
yeah,
a real binary moment I see a lot of good gold stocks out there right now that are growing their market cap. They're having to grow their fully diluted share count at exactly the same rate. So the value proposition isn't
yeah,
changing.
yeah,
And so, sorry, this has become a longer winded answer to
yeah.
your
Oh
question, but
no,
I think
yeah,
we were trying to think, well, how do we break that cycle? What can we do that tells us, that gives us, like, that we control some of our success?
yeah,
And it's on the back of our shareholders. So we sat down with a number of the shareholders and said, this is what our options are. We could look to raise early next year and have people know that that was coming. Or everyone agreed that these 30-cent warrants were going to get exercised in the next couple of years. The path of, we're at what, 0.1, 0.15 NAV, we should be at 0.3 to 0.5 if we deliver what we plan to in the next 18 months.
yeah,
So we looked and we said, well, we were slightly around the mark of the 30 cents, and our big shareholders said, yes, this makes sense. In fact, they wanted the smallest unit worth the most, from their internal metrics. So we struck the third of a warrant at 40-cent incentive, and we've got 4.6 million of those commitments. You're right, we're doing a lot of volume around 30 cents. I know it's working because I'm seeing some of the checks land
yeah,
at the office at the moment. So I think we'll be able to put out whatever that total number is at the end of next week. And then that incentive for people to flip at 30 cents for the incentive will disappear. We'll
yeah,
have a strong cash position. We will have, our fully diluted share count will have hardly changed at all.
yeah.
We'll have bought a lot of treasury in. So we think it was the best outcome for shareholders. I think it sets us up really well beyond the 8th of December.
Yeah, no, I think it was a really good idea. So what is the next? Well, one thing too is that uh, you're working on something magical, hopefully non-equity to deal with the decline. That decline, presumably, because part of it's in, that's permanent. Like there's no permitting timeline or anything like that with that. It's just basically when you get the money and you decide to do it, you can just start doing it.
Exactly. So the great advantage of having the open pit permit, of having the decline previously permitted, is we don't have years delay.
Yeah,
I think the speed at which we can move is so unique at Paula. Piggybacking on the 100 million of sunk capital before we turned up. Um, they give us huge advantages. So yes, we continue to work on that. So either way, we'll have drill results coming next year on both infill for resource conversion, as well as testing some of our growth ideas. And we'll look to pull off this decline approach. I think they both make a lot of sense to do.
yeah,
We've got a lot of interest on both sides. So we're just trying to make the best decisions that we can. And I've always viewed if you have multiple options, you're more likely to be successful. We've been in a market where the equity market's been pretty close. The cost of capital has been pretty high. So if you didn't have this other pathway, you wouldn't necessarily be able to advance. It might be more prudent to be a bit slower. But I think having both pathways means that, if we can present to the market next year a pathway that delivers studies, growth, a decline in the bulk sample without any or very minimal equity, that's going to set us up for very significant share price performance.
Yeah, and within all that, I guess you're just going to kind of keep going with the drill, particularly if you get this new money and you'll just let the guys keep drilling holes while all this other stuff is going on.
Correct. So the guys will take a break now over
Yeah,
Christmas. Just given the equity markets were a bit tight, we pulled it up a few weeks early,
yeah,
and then we'll look to get back drilling early next year. We've got so many open intercepts, and we've got a mixture of resource drilling and growth drilling to do. We'll probably provide an update in early January, mid-January, on what exactly that plan looks like for next year. I can guarantee it involves a lot of drilling and involves a
yeah.
lot of the studies and the de-risking steps. I think the other thing that you'll see is I've talked about growing our management team and our board. You'll see that expertise coming on very shortly. We've been working on that as well. So all the hard deliverables that we laid out this year, the resource growth, the high grade upfront in the mine plan, the network, as well as the new targets above and beyond the resource, delivered on those. And then the last one I've been talking to people about is bolstering the team. And I look forward to announcing those shortly as well.
Okay. Well, there you have it, folks. I mean, Heliostar's been a great story. I mean, I've known Charles for a long time. I'm fond of the guy. I wasn't fond of the Alaska project. I mean, I liked it, but it just looked like it was going to be really painful. And Paula looked great the minute I saw it. When he introduced us to the market earlier this year, Heliostar laid out a very concrete set of steps that would be completed through the year in order to increase the the value of the project. And yeah, there's still a PAs in the future, but you know, someone that's used to looking at these things could see concrete potential for valuation increase with each one of these steps. And I've got to say, all of the steps, the ones that Charles just mentioned, Healy stars actually pretty much exceeded expectations with every single one of them. So don't be fooled by the fact the stock's sitting at 30 cents. Anapol is immensely more valuable than it was a year ago. And it looks to me like Charles and his team are just getting started. So I think this is a great deal. In a rising gold market, this is precisely the kind of deal you want. So Heliostar Metals, HSTR on the venture. Thanks for coming by, Charles. Great work all year. Good job, man.
And we got more to come. Thanks for having me, Eric. We'll keep you updated.
Okay.